Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. We are, of course, bringing the VRIC to you with our series of expert online panels. We have a fantastic one lined up for you today. We've got Steve Penny, founder of silverchartist.com, and Clive Thompson, retired managing director of wealth management at UBP. Both of these gentlemen very well versed in the gold and silver sectors, which is where we'll be focusing our attention today. Steve and Clive, it is great to have you both on the show.
Jesse, thank you very much for having me back. What a year it's been.
Yeah, thank you, Jesse. Great to be here, and great to be here with you as well, Clive. Look forward to a great conversation.
Well, what a fantastic day indeed it is for silver stackers. Silver hitting new all-time highs in nominal terms. We're at around $81 and change as of the time of this recording. It is currently January 6th, 2026. Obviously, silver had an incredible rise in 2025 as well, up well over 140%, outperforming gold in the broad market by a wide margin. We've seen some roller coaster price action to close out the year, drastic swings back and forth, and here we are today. What do you make of silver's run, the major volatility in the price action as of late, and how do you see it positioned here in 2026? And Clive, I'll start with you on this one.
Well, I suppose the direction of travel upwards was not at all surprising. I mean, that's been widely flagged and for some years. And we've known that silver's been in short supply relative to the industrial use of silver. So it was only a question of time before the above ground silver stocks declined to a level where the price had to be forced higher. I think what's surprised a lot of people is the speed at which it's gone. I mean, I think a lot of us kind of were hoping we'd get to the $50 mark at some point, and probably we'd flag that for next year. And we soared through it at the end of literally the last month or two, and at an incredible pace. I think it's, what's happened is easily explained in terms of the shortage of supply of silver and the demand going up. We've had the United States declare that it's a strategic metal. We've got fears about import taxes coming into the United States on silver. That's not actually happening, but it's obviously has been a fear in the year. And we've got a growing level of distrust generally about the money we've got and what's going to happen. And I think maybe it's going under the radar screen a little bit, but the introduction of the digital euro in Europe is making people think, what's my alternative?
Yeah, great summary. Steve, what are your thoughts on silver's trajectory so far, hitting new all-time highs today and the volatility we've seen?
Well, I would echo what I've just said. I don't know of anyone who expected $80 silver this early, this fast. I'm primarily a technical analyst, and I had a chart highlighting the roadmap to $50 silver in 2025, and I thought that was being, pretty generous with a target of 50. I did not expect 80. However, I've long said that I think the 1970s bull market is the best analog for this current bull market, and I think we should expect to see an amplified replay, not a muted replay of that 1970s bull market. So bull markets do surprise to the upside. I do think we've got much higher to go over the long term in silver. However, this move up towards 80 really has caught many by surprise, including myself. I did not expect this fast of a move. However, I've been saying that on that year cup and handle pattern in silver, a lot of people have seen that. It's been across the internet. Once you break that $50 level, the next measured move target is 96. And if you want to be a little bit more conservative, it's 88. So 88 is the most conservative measured move target on that 40-year cup and handle pattern, with 96 being the next most conservative target. So I think that's where we're headed. And, we're only within spitting distance of $80, the lower end of the target right now. I'll add too, on the daily chart, on the futures price of silver, I think it was 82.67, if memory serves correct, was the high from a couple weeks ago, or about a week ago. Well, a break above that level would be significant. We haven't cleared that intraday high, but if we do break above there, I think the path of least resistance becomes higher towards 88 and potentially even 96.
I didn't have this question. Oh yeah, go ahead, Clive.
I was going to say the current price of silver doesn't deter me from wanting to buy some. Last week I was in Cron, Montana, and I went in there's a shop which sells watches and buys and sells gold. I went in twice, but he was too busy to deal with it. I was going to go in a third time, and then of course disaster struck and the whole road was shut down, so I couldn't go there. And I went in on Monday to Degussa in Geneva, which is a major gold and silver dealer in Switzerland, and was turned away. They said, sorry, the demand is so high, we're only taking bookings. The earliest you could have a booking is Thursday. And I said, well, what's going on? Are people selling or are they buying? They said, no, it's all buys.
Wow.
It's kind of funny. We could probably have lots of side discussions, but I remember a couple of years ago when we were telling our friends and family about silver, one of the most common questions was always, who's going to buy it when I want to sell it? And I would always say that's the last problem you're going to have. When it's time to sell, there's going to be everyone wanting to buy. Not suggesting now is the time to sell, but just an interesting.
Well, I think the reality now is it's getting. I mean, my experience, it's getting harder to buy. I mean, the fact they had to take an appointment for Thursday on Monday shows you how long the queue is. They said, look, we can't have all these people turning up in the waiting room. I used to go in there, and every time I went in, there was one or two, maybe three or four people there. But obviously, one or two has turned into a bit of a crowd now.
Well, I've seen other anecdotal evidence on X about a Bullion Star, I believe, posted that they had, an incredible lineup around the store for people trying to come in. They were getting stressed in terms of serving the maximum amount of customers that they could take within the store at one time, which is very interesting. Do you think that there is potentially a global awakening occurring when it comes to silver specifically and also gold as well? The thing with gold is at this point, it's so expensive. Your average person isn't necessarily, your Joe Sixpack isn't able to afford an ounce of gold. Perhaps they could buy a smaller denomination, but when you get into like quarter ounces, you're paying a really high premium. Silver looks more attractive. Is it fulfilling its role as the poor man's gold? And is the general public starting to wake up? And do you think that could be an impetus for another leg up in this bull market? Steve, I'll start with you on this one.
Sure. Yeah, I think we're in the early stages of that. We are beginning to see people who never asked about silver before. All of a sudden, I'm getting text messages from people I haven't heard from in 5 years saying, "Hey, you still know anything about silver? Should I buy?" So I think we are in the early stages of that, and I think there's probably multiple years to go left in this bull market. However, I like to say strategy is greater than predictions. So people always want to know, hey, what's the prediction for silver? Where are we headed in the short term with price? And I think strategy is a lot more important. So for me, like sometimes we're talking to people who have zero allocation. And if I'm talking to that person, well, I would say, hey, I would certainly be, dollar cost averaging and getting some exposure here despite the big run. Now, some people, I know there's people out there who have virtually all of their net worth in silver and gold. To that person, I would say to consider rebalancing. You don't have to be 100% in silver and gold. We waited a long time for this run. So that's just some general thoughts on strategy. But I do think we're in the early stages of this bull market, and that mass public awakening is maybe just starting to begin.
And Clive, when it comes to yourself being asked to be put on a wait list to enter and even purchase precious metals products, is this the first time that that's happened in Switzerland? Have you ever seen this sort of demand before as a retail buyer?
No, I've never been turned away from buying gold, whether it be from the banks. There's also a gold counter at UBS, or from Degussa, or for that matter, there's another place I go to sometimes. Not one of them have ever been so busy that they said, we're only taking appointments. It's never happened. I mean, once or twice I've been in there, certainly towards the end of last year, I noticed it was getting busier and busier. I mean, if I go back a year or two ago, I'm talking Degussa now, I would go in and I was often the only person in the shop. But over if we go back to sort of August through to December, I went in 2 or 3 times to buy coins, and there was sometimes 2 or 3 people there. I wouldn't say that was a lot, but it was a lot compared with 0 in the year before. And I'd echo what Steve said. When you're wanting to buy gold or silver, I don't think it makes any sense to go all in at once. Otherwise, you might find that the day after you bought it, there's a big dip. So the way to play the game is ease in gently, buy a little bit now, sit on it, see how you feel, buy a little bit more, maybe you'll get it cheaper, maybe you'll pay it more expensive, but it doesn't matter whether you pay either more or less. What you're doing is ensuring you will not be the person who paid the highest price ever, because you'll have paid an average of the prices over a period of time. What would hurt really if you go in and say, I'm putting all my money in silver or gold now, and then the price starts to drop and you've got to wait a month or 2 months or 3 months or 6 months for it to get back to where you paid. And that, that can be really, really distressing and cause people to panic and say, I made the wrong decision, get out. But going in gradually, well, then you won't pay the highest price, whatever happens.
Well, I'm continuing to go off script here, guys, because I'm just getting ideas popping into my head. But one thing I wanted to ask was how to know when it's time to sell. Because Steve, that's a question you brought up, and you said that'd be the least of your worries. But if we look back at the previous bull markets in silver and the previous all-time highs in 1980, it hit $50. In 2011, it came close to that number. And then there was a dramatic fall on the other side. Do you think that could be a possibility this time around, that when silver runs up to a certain level, it could drop down on the other side? And so along the way, should people be taking at least some of it off the table and not holding on for dear life throughout the whole thing? Because there's some people who are of the mentality. I spoke to Ed Steer recently, and he said, I'm not selling an ounce of my silver at any point. That will be passed down to my children. And that is wealth. That is money. That is, wealth stored outside of counterparty risk. So when you get into the hardcore stacking community, a lot of people feel the same way. This is money. Why would I trade in my money for worthless paper currency? What are your thoughts on the question of taking money off the table, perhaps when things get too overheated, Clive?
Well, first of all, if you're planning to trade in and out, we're obviously not talking here about long-term holdings, you probably shouldn't be holding the physical for trading. You should be buying paper gold or paper silver, because that has a lot less frictional cost when you go in and out, and it's much easier to trade. You can just pick up the phone or go online and trade it. So I think everybody, if they have an idea that they're going to sell at some price, they should have some of their gold or silver in a paper form. Now, I know most stackers and traditionals hate that, but if all you're trying to do is get in and get out, paper is the way to go. But on the other hand, everybody, absolutely everybody, should have some physical as the plan B. It's not anybody's liability. It's out of the financial system. And I think in the world we're in, you need to have some assets, that would include your house, of course, but other assets which aren't part of the financial system, which are genuinely yours, which you can touch and nobody can take them away from you. And gold and silver are a way to do that. And that's not the sort of thing you should be selling. So, but if you're minded to sell, you've got paper silver. One of the rules I have for everything, and that includes equities or whatever you like, but it applies to just as much to paper and silver ETFs and so forth, is when you feel the urge to sell, take a little bit of the profit off the table. And I personally tend to leave the original holding and some rolling. And I know too many people who see a surge in the price of something and say, well, I've got to grab this price because today's price is an accident and last week's price must have been the right one. The fact it's just gone up, means everybody's making a mistake because it's going to go back to last week's price. So they immediately rush to sell to grab that new price. And a week later, they're regretting it like anything because, as we saw, silver, a lot of people thought, okay, 66 silver about. And now where are we? We're eyeing 90. It's 81 or something like that now. So if those people who did rush to get out last week, and there were plenty of them, because a lot of people write to me about this, if they would have just sold some of their silver, they'd still be in the game. They could feel disappointed they'd sold a bit, but at least they'd still be in the game. And if it went down, they'd be happy they sold a bit.
Yeah, good points. Steve, what are your thoughts?
Yeah, I absolutely love this question, because going back to studying the 70s bull market, 1979 into 1980, so many people failed to take profits from what I read. I wasn't there. I was only, I hadn't been born yet. So I'd be interested to hear Clive's thoughts on if he experienced that last part of the 1979-80 bull market. But I like to say no one's going to time the exact top. So think about that. And every precious metals investor should the sell plan on what is your exit strategy. When will you push the sell button? When will you take some profits? Knowing that you are not going to time the top. No one's going to do it. So the way I do it is I have a certain allocation that I intend to have as a generational insurance policy for my children and children's children. In other words, I'm never going to sell it. Then I've got a different bucket plan to sell. And with the dollar being an ever-changing unit of account, it is not based on price targets measured in US dollars or any other fiat currency. Instead, it's ratio based. So I have certain exposure that I intend to trade for other cash flowing assets, namely real estate and dividend stocks. And I track those ratios very closely. Silver versus real estate, silver versus a dividend ETF that I track, a dividend fund that I track. And when I can swap some metal for those cash flowing assets at predetermined ratios, I will do it. And having a plan ahead of time will take some of the emotion out of it. It's always hard to push the sell button, but having a plan ahead of time makes executing your plan a little bit easier. So swapping some for cash flowing assets when the ratios dictate makes a lot of sense for me. And by the way, we're not there yet. So I'm not doing that yet, but I have my numbers and I have my ratios in mind.
And Clive, do you have any insights from the Hunt Brothers silver squeeze? Were you in the business back then?
Well, I was in wealth management at the time, and I read the book called Silver Bulls, I think was the name of the book, about the Hunt brothers, and they were royally screwed over by the exchange, in my opinion. That's me expressing an opinion, because basically the exchanges brought in silver rule number 7, which basically said you can sell your silver, but you can't buy any more. And you can't take delivery. So they had a one-way ticket to sell and no choice. And of course, that because they'd borrowed money to buy all this silver, it effectively bankrupted them.
George and his team, a 16-year VRIC employee building some of the largest mining operations on the planet. We started a drill campaign, from the drill campaign moving into a full engineering report and study. We came out with our pre-feasibility study in 2021, and it showed a really impressive economic case for advancing the project. We'll have final definitive feasibility out in December of this year. So in the space of 4 years, fully engineered, fully permitted. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Yeah, a very interesting story. There's a lot behind it, and I'd love to read that book, actually. Now, the question of silver deficit, it's been in a deficit going on. I think this is the 6th year, according to the Silver Institute. And one of the interesting things about this is that it's not very easy to bring a large amount of silver production online because there are very few pure silver mines on the planet. Most of the metal comes as a byproduct of copper, zinc, lead, and other metals. How does that influence the picture when it comes to supply-demand dynamics, Clive?
Well, the supply can't and won't change very much. It probably will go up a bit this year. What happens when the demand exceeds the supply is the price has to rise, so recycled silver comes out of the woodwork. And of course, there's plenty of silver above. Well, I say there's plenty. There's less silver than there used to be above ground, but there's silver above ground, and every kilo of silver has its price. So as the price goes higher, there will be sellers, and that is what goes to meet the demand. But we've got another side of the equation. We've seen in recent weeks, and it's anecdotal evidence, that there's been a shortage of physical silver for delivery, for immediate delivery. And the reason we've come to that conclusion is the gap which has opened up between the price of silver in Shanghai and the price of silver on COMEX. Now, the two have traditionally traded within 50 cents or $1 of each other, and that premium has gone to, at times, $7, $8, $9. So it was, I haven't got it. I think today I saw it was down at $5, but it's still 5 times the normal level. So that what that means is the silver isn't there for people to arbitrage it away. Otherwise, they'd be moving silver on a plane to Shanghai, be selling it immediately and delivering what they've just sold the next day. So it's not happening, and that's probably because there isn't the silver to be had. People can't lay their hands on silver easily. The other slightly less provable evidence is we're hearing that the lease rates on silver are very high. I've been trying to get my hands on the current lease rates, and everywhere you ask, some people say it's 30%, some people say it's 8%. But anything over 0.25% is another problem. It basically means that the manufacturers, not the manufacturers, the consumers of silver, the big auto companies, the solar panel companies, they need to get their hands on silver now. They've been working on what's called just-in-time supply chains, and suddenly they've realized that's a bit too risky. We better have a month's supply or 2 months supply, and now they're all rushing at the same time to say, we want to be first, make sure we don't have to shut down our production line. We can't, it doesn't, if you've got an ounce of silver in a car, and it's something like this, between 0.6 and 1.8 ounces of silver per car, we're talking about the difference in the car price of going from $50 for an ounce of silver to $100. We're talking about an extra $50 on the price of a car. They're not going to shut down the production line because it costs them more for the silver. So there's this rush going on by manufacturers to say, we're not sure if this silver shortage is there, but we've got to get it, and that's pushing up the short-term price.
And Steve, your thoughts on where the silver is going to come from moving forward, and any comments you'd like to make on Clive's observations, including the spread difference between Shanghai and the West?
Yeah, great comments by Clive. And this is admittedly not my area of expertise, but I do have general thoughts. And I think the heart of your question is, will coming new mine supply solve this supply-demand imbalance over the short term? And I think the simple answer is no. There's a lot of newcomers to the silver space, and I've even heard some generalist kind of financial advisors say, oh, well, new mine supply is going to come online with $80 plus silver. Well, it doesn't really work that way. It takes years for a new mine supply to come online. And, most silver is mined as a byproduct of lead, copper, zinc, and other base metals. So it doesn't work that way at all. So the idea that a higher price is just going to instantly incentivize new production is not how it works. It takes years for that to work through the system. And ultimately, for that new supply to release for the industrial users, the price is going to have to rise high enough that investors are willing to release their silver. Like you just said, Ed Steer, they're going to hold on to that thing with clenched fists until much, much higher prices. So it's going to take significantly higher prices for, many investors and stackers to release that silver into the market. And, an interesting potential upside kicker, and I think we're seeing early signs of this, is, industry. What if Tesla or Samsung or one of these big major companies says, you know what, this is such a critical component to our whole business model that we're just going to go straight to the miners and just take supply right from the miners. So now you'll have investment demand competing with industrial demand. So those are general thoughts, but admittedly not my area of expertise, as I primarily focus on the charts.
Well, that's an interesting comment. Oh, were you going to say something, Clive? Go ahead.
Well, there is another factor kicking in this year from the 1st of January. China has brought in some regulations which require export of silver to obtain permission before the silver is exported. Now, I've read some commentary on this. It seems that the regulations are particularly complicated, which means that only very, very large silver producers will be able to apply for that permission effectively, and it will only be granted in certain circumstances, which I think are unspecified. But what that does mean is the export of silver, which was they were a net exporter of silver, the export of silver from China to the West is going to be less going forwards than it has been.
Yeah, that's a very interesting point. Now, silver is being seen more and more as a strategic metal. I think governments and corporations, as you were alluding to, Steve, are starting to see the writing on the wall. Elon Musk even chiming in on X saying, oh, this isn't good that the silver price is going up so much because of its use in industry. But as you pointed out, Clive, for a lot of industrial uses, it doesn't really move the needle that much in terms of the final price that the consumer has to pay. But I wonder what both your thoughts are on both this kind of corporate and the beginnings of what seems to be a corporate and government awakening. Clive, you mentioned the China export controls, as well as silver being put on the critical minerals list in the United States, as well as some other countries as well. How do you see that all playing out in terms of export restrictions moving forward? Do you see more countries starting to kind of try to keep their silver within their own country's borders, and as they realize its strategic importance? As a bit of a side note, Russia also had mentioned several months back that they were starting to stockpile physical silver along with platinum and palladium and some other metals for strategic purposes. How do you see this all playing out, Clive?
Well, I think one of the interesting plays going forwards will be what the United States does about the strategic minerals. The fact is they've now made it a strategic mineral, which doesn't mean to say they've started buying it, or at least we have no evidence that they have. But what that does is it opens the door for government agencies, such as the military, to stockpile silver. Now, the military, going back to the 1950s and 60s, did own many years' worth of supply of silver. I don't know what they did with it, but by all accounts, and I've tried to establish this, I've got the answer that it's all gone. It's all gone. So I don't know if it's in use by the military. People say it is in use by the military. But of course, the bigger use in the United States and other countries is the automotive, electrical and solar panel industries. And we're not going to have any less of any of these things. So the silver demand is only going to go up. And of course, it is critical to the continued production of these things. So can you imagine if there was some sort of disruption from Mexico to the United States, where a lot of the silver is taken out of Mexico and goes to the United States? Let's say there's some problem or something. The United States would be in a bit of a problem if they have to shut down certain manufacturing facilities, such as in the electronics industry or the data centers, where silver is a critical component for expansion.
And Steve, what do you think? Do you think more governments will start potentially stockpiling silver and restricting exports of the metal as well?
I do, yeah. And I've got kind of an indirect answer to your question. So my primary investment thesis for silver and gold is that they are money, and they have a 6,000-year track record of doing a full accounting for the expansion of debt-based fiat currency. That's just what they always do time and time again. And that's my primary investment thesis. Silver and gold are money. Currency is being debased, and eventually silver and gold will do a full accounting for all that debasement. Now, I look at things like you're mentioning here, export controls, stockpiling as a critical mineral, or even potentially a force majeure on COMEX as potential, just like fire on the flame, upside kickers. And I think those are very real things, but my primary fundamental thesis for investing is that they are money, and these are just upside kickers that add fuel to the flame. But I don't track that super closely, but yeah, I believe that they are factors that just are going to make this silver bull market possibly an amplified replay of anything we've ever seen before in a precious metals bull market.
Interesting comments from both of you. We should talk about gold here. Also a huge story in 2025, hitting new all-time highs. I believe we're at over $4,400 as we speak, 4,480, something like that. What do you both make of gold's rise? And are we closer to the beginning or the end of this bull market in your view, Clive?
The fact is, I think that confidence in the governments getting their debt levels under control is diminishing. There was a little bit of hope when we had the Department of Government Efficiency, which looked like it might be starting to make some inroads until it suddenly stopped. So realistically speaking, I think we're set for ongoing expansion of debt around the world, Western world in particular. We're seeing the interest expense rise because we've come out of a very, very long period since 2008 of hyper low interest rates, got up higher interest rates. Now we're coming down again, but we're still well above the levels of interest that were being paid in that sort of 10, 15-year period after 2008. And what that means is a lot of government debt, as it starts to mature, has to be rolled over, along with the new debt, which they need to take on to fund current spending, and it's all being rolled over at higher interest rates than the interest rate being paid on the maturing debt. And people are starting to see that it's there for everybody to see because it's on the government website, that the amount of interest being paid as a percentage of the taxes being collected is rising very rapidly. And what that means is we're approaching some sort of spiral, and we can't say when it does spiral, but we're approaching some sort of spiral when there is no end to it, and people potentially can lose confidence very, very quickly over some minor event which might happen, and suddenly everybody loses confidence and there's a panic, and then the government can't fund itself. At that point, something happens, and I can tell you the winners will not be those who are using government debt. And I think that's why a lot of wealthy families, institutions around the world, and central banks are starting to say, we don't want to have it all riding on one thing, i.e. government debt.
And Steve, what do you see as the main drivers for gold at the moment? And what are your thoughts on where we are in this current bull market?
Yeah, I think the main drivers are currency debasement and no end in sight, by the way. So in terms of price, I think we are closer to the beginning this bull market. In terms of time, I think we are further along. Now, I think this market probably goes to the end of this decade. Ultimately, as Clive described, the end game is, problems have solutions, predicaments have managed outcomes. And I don't see a solution to this problem. The United States and almost every government around the world that I know of is in a situation where their debts and unfunded contingent liabilities are simply unrepayable. So they have one of two choices. They can default honestly, or they can continue to inflate their currency to, make good on their obligations with debased currency units. And I think history suggests that 100% of the time, they always choose the latter. They always choose to debase the currency because people don't understand it. People don't understand inflation. If you go default honestly, there's going to be riots in the streets and the politicians are held accountable. So I think the end game is, that's the end game where we're headed to. And I don't see a scenario where silver and gold are not the prime beneficiary of that environment. Now, I see gold as very likely entering the financial system. So I see gold having a big run up and then potentially plateauing as it enters the financial system in some form, whether it's formal or informal. Where silver, I think, is more likely to have a big kind of run up and have its big pullback. That's just kind of what silver historically does. So as far as what inning we're in terms of price, earlier innings, my ultimate price target is somewhere based around $15,000, and that's based on the average of the two previous bull markets, 1970s and then 1999 to 2011. So I think we got a way to go in terms of price, but the pace of change is accelerating. Our minds are wired to think in linear fashion, not exponential fashion, and things are happening on an exponential scale right now. So things are happening fast. So in terms of time, this could all happen sooner than many think. I'm not saying in the next few months, but over the next few years, I think the world could look dramatically different, especially the global financial system, and gold will likely be a key part of that.
So I would add three things to your ending. You said obviously default or inflation, which inflation is definitely the preferred outcome. I think there are three other possible outcomes to, inverted commas, solve the debt problem. One would be financial repression. By the way, all these outcomes are very good for the price of gold. So financial repression is where you have heavy capital controls and you tell people what they can and cannot do with their money, and you enforce that. The second possibility would be one where they force people to use another kind of money. And I'm thinking along the lines of central bank digital currency here for all your transactions. And obviously, on the day one, at least, you'd understand that you can move your money freely between the money in your bank and the central bank digital currency. But there's a risk that may be blocked or limited or controlled in some way. And if they start to do that, that basically means there's now a second currency in circulation and you can't deploy or use the currency in which the government is repaying its debt. So it's repaying its debt in a currency which can be used in day-to-day transactions. And that would, of course, effectively allow the government to start with a debt to GDP ratio of near to zero in the new CBDC and not really care what happens to the old one because you can't do anything with it. And there was a third one, which I forgot what the third one is. It will come to me in a minute.
And Steve, in the meantime, do you have any thoughts on the central bank digital currencies? Is that something you've been watching? Do you think that's something that will attempt to be, we've got the digital euro rolling out, and essentially they've been talking about the fact that they're going to be able to implement capital controls with that particular form of currency. Could you see a similar system coming to the United States? And if so, what do you think the implications would be?
I do. Yeah, I think that's coming, unfortunately. And I think a lot of people potentially here in the United States have put their guard down because of the Genius Act and perhaps, their man is in office. And, I would say that the forces behind this central bank digital currency push are still in play. And I think that's sadly coming. And I think, the concern there go far beyond financial ramifications, but more about control. The government's going to be able to, if this comes to fruition, track your every purchase, social credit scores, all of these kind of things come into play with BDCs. And that's just yet another reason to hold physical silver and gold stored outside of the banking system because they're not part of that. They're not tracked.
And equities, gold and silver stocks have obviously performed very well. although they took a while to kind of catch up, especially when it comes to gold's rise, for the equities to really start to provide that levered play on the metal itself. But nonetheless, we have seen great performance, gold and silver stocks doing quite well, but not as well as many expected. Do you think that investors are still wary that these high prices in precious metals may not last? Is there another explanation for the lack of torque in many of the stocks? And do you think gold and silver miners in general are undervalued at these levels, Clive?
They are undervalued in general. Of course, there are exceptions. I'm studying at least once a week one or two gold or silver miners, and we're talking really gold miners at the moment. I'm factoring in today's price of gold into my 2026 expectations for earnings per share. And there's a whole methodology for doing it right. But when I do that, I come up with price earnings ratios which are very low in what will be, that's for 2026, 27, in what will be companies which appear, at least at the earnings level, to have high growth by then. So obviously, we have to remember that a gold mine or a silver mine, in theory, is a hole in the ground of which there's less and less raw material left to take out of it. But the reality is many gold mining companies like Homestake and others, and Newmont and Barrick, they've been going for decades and decades, and their reserves don't get any less because as it runs out, they acquire more reserves from somewhere. There's always something they can acquire. So when you've got a growing earnings, and if the price stands still, it means the price earnings ratio goes down. But that's not a natural phenomenon. When you have a company whose earnings are growing, and in particular for something which is popular at the time, the price earnings ratio is generally high, not low. But even if I take a low price earnings ratio of 10 times next year's projected earnings, many of these companies will have higher share prices, in my opinion, if that 10 times ratio is held. And 10 is a low multiple when you think that the market itself should be more, the general broad stock market is at sort of like 20 times, 23 times.
Some great observations. Steve, your thoughts on the gold and silver mining space at present and the opportunity it's presenting?
Yeah, I've spent a lot of time thinking about this in the last week or two, and I think my baseline expectation is that mining stocks are going to have a rapid catch-up move relative to the metal. However, it is possible that the mining stocks are forecasting a pullback in the metal. It is possible, not my baseline expectation, but I like to look at ratios, metal versus mining ETFs, and one that really has my attention right now is SILJ, the Junior Silver Miners ETF versus the price of silver. Back in 2016, expressed as a percent, SILJ was 85% the price of silver. Right now, it's 29%. So let's just call it 30% the price of silver. Historically, that ETF, so mining stocks in general, are way undervalued relative to metal on a ratio basis. So let's just say as a thought experiment, let's say they went back to that 85% ratio to silver. Well, with silver at $80, well, what's 85% of 80? I'm not going to do that math here in public, but I know it's north of $50 or $60 with SILJ being 30. So you could make a case that mining stocks or SILJ could double with silver prices just staying stagnant. Not necessarily predicting that, but it is within the realm of possibility. So I think that ratio is going to normalize somehow. Three simple ways it could normalize would be mining stocks pull way back, or the metal pull way back while the mining stocks stay stagnant. On the other end of the spectrum, mining stocks play rapid catch-up, or they meet in the middle. The metals consolidate and pull back a little bit while mining stocks rise. I think that the more bullish extreme is the most likely, where the mining stocks play rapid catch-up.
Well, gentlemen, this has been a fantastic conversation. Clive, tell us where people can find your work online. I believe LinkedIn is the main platform you use, correct?
That's right, Jesse. I recently started, actually it was a few months ago now, a YouTube channel, and I put out videos about stocks, shares, gold, silver, and anything which comes into my head. And it's really for people who are unfamiliar with investing to get started. So Clive Thompson is the name of the channel, and I also have a webpage called clivethompson.com.
Great. Well, I'll put links to that as well as your LinkedIn profile in the description. Steve, there'll be a link below to silverchartist.com. Tell us about that service and what you do there.
Sure. Yeah. And thanks again, Jesse, for having me. Clive, it was great to meet you. Great sharing this panel with you. And I always enjoy learning from people who've been doing this a lot longer than me. So I'm going to go check out your YouTube channel as well. So nice meeting you, Clive. Yeah, silverchartist.com, fully transparent, over-the-shoulder service, real-time alerts. Silver, uranium, gold, and platinum are our focus sectors. Don't claim to get every turn correctly, but you get to see exactly what I'm doing in real time, and there's an awesome community there as well. So thank you, guys.
Link in the description, gentlemen. Fantastic discussion, and looking forward to hopefully getting back together and doing it again.
Bye-bye.